Hey Tech fam, welcome to the Tuesday edition of Tech Stocks Daily. Today we're diving into Oracle's jaw-dropping AI breakthroughs and seesaw market bets, CrowdStrike's thrilling options activity and legal drama, and AMD's game-changing $4.9 billion acquisition frenzy. Stick around to find out why whales are making big moves on Oracle, how CrowdStrike's Falcon platform fumble led to a federal lawsuit, and what AMD's stealthy takeover means for the AI and data center world. Trust me, you don't want to miss this action-packed episode. All right, tech enthusiasts, grab your snacks and put on your thinking caps, because today we are diving deep into the world of Oracle. And oh boy, it's a roller coaster. From big money bets in the options market to jaw-dropping AI breakthroughs, Oracle has been flexing those technological muscles and making some serious noise. First up, let's talk money. Big money. Recently, some serious whales have taken a stance on Oracle's stock options. With a split sentiment of 40% bullish and a hefty 60% bearish, things are heating up. These whales have thrown down around $3,651 on put options and $578,245 on call options. So what does that mean? Well, someone with deep pockets thinks there's a storm brewing on the horizon for Oracle. They've been targeting a price range from 110 to 145, according to the volume and open interest metrics we've seen accumulating over the past 3 months. If you're thinking, okay, but why should I care? I'll break it down for you. Options trading isn't child's play. It's the high-stakes poker of the financial world. These traders don't just throw their money around for fun. They analyze every tiny detail. So when we see whales making big moves, it's like seeing John Wick enter the room. You just know something's about to go down. Keep your eyes peeled, folks. Now let's dig into the meat and potatoes of Oracle. Its stellar strides in the AI and cloud computing sectors. Oracle's AI data centers aren't just any data centers. They are like the cool kids of the tech world. They allow developers to scale up to 32,768 of NVIDIA's GPUs, a number that's practically scoffing at its competitors. Why does that matter? More GPUs mean bigger, badder AI models and faster, cheaper development. It's like upgrading from a bicycle to a rocket ship. But wait, there's more. Oracle's networking technology, their random direct memory access, makes Ethernet networks look like they're stuck in the Stone Age. By speeding up data transfers, companies save big bucks because they're paying for this computing capacity by the minute. And if time is money, Oracle is essentially printing it. Another heavyweight detail, Oracle's cloud infrastructure segment. This area has been growing faster than a meme on the internet, seeing year-over-year revenue increases north of 40% in each of the past 4 quarters. Oracle even forecasted a whopping 50% growth in OCI revenue during fiscal 2025. Chairman Larry Ellison touted that Oracle's Gen 2 AI data centers train AI models at twice the speed and for half the cost of competitors. Those are not just minor upgrades. We're talking quantum leaps here. And here's a cherry on top. They've raked in $98 billion in performance obligations, including $12.5 billion worth of deals from over 30 AI companies. So what's the takeaway? Oracle is not just playing the game, they're rewriting the rules. Keep watching because what happens next could very well be a game changer. Hey tech enthusiasts, today we've got a hot topic on our radar, CrowdStrike Holdings. This cloud-based cybersecurity giant isn't just making headlines, it's practically lighting them on fire for 2 big reasons. Buckle up, because we're diving deep into some intriguing options activity and legal drama. First up, let's talk options. Our friends in the financial realm have noticed some unusual bear and bull action around CrowdStrike Holdings, trading under the ticker symbol CRWD on the NASDAQ. Analyzing the options history, they've detected 15 unusual trades. Here's where it gets spicy. 40% of these traders were feeling optimistic, while 46% were glum. We're talking about 4 puts worth $307 and 11 calls valued at $541,974. What's the scoop? It seems the big whales are eyeing CrowdStrike with a keen interest, focusing on a stock price range between $240 and $370 over the past 3 months. Interesting move, eh? Today, the mean open interest for these trades stands at 72003.58, with a total volume of 2,583. Whether you're into options trading or just love following the big dogs, this is one drama worth watching. But wait, there's more. The second major piece of news involves a major legal hullabaloo. Faruqi & Faruqi, LLP, a renowned securities law firm, has unleashed an investigation on behalf of CrowdStrike investors. Investors who suffered major losses are encouraged to reach out to discuss their options. A federal securities class action has been filed against the company, accusing it of making false or misleading statements about their Falcon platform. Apparently, the complaint alleges that CrowdStrike didn't have adequate controls for updating their Falcon software. This lack of rigor caused a chaotic update on July 19, 2024, leading to massive outages on millions of Microsoft Windows devices globally. Oops. The resulting news had a grave impact, causing CrowdStrike shares to tumble over several days, from $304.96 down to $263.91, and eventually $233.65. Not exactly what you'd call a good week at the office. Making matters juicier, Congress hauled CrowdStrike CEO Kurtz in to testify about the debacle, leading to even more analyst downgrades and investors' unrest. Delta Airlines even got involved, hiring David Boies to seek damages for the outages, forcing CrowdStrike under the microscope legally and publicly. So, There you have it. CrowdStrike is right at the intersection of intense financial scrutiny and spiraling legal woes. For traders and tech geeks alike, this is a story worth following. Will CrowdStrike weather the storm and bounce back? Only time will tell. That's your Tech Buzz for today. Keep your eyes on those stocks and options, and stay tuned for more sizzling tech updates. Hey Tech fam. Today was absolutely jam-packed with some spicy news about advanced micro devices, better known as AMD. So let's dive right into why AMD is making waves in the tech ocean today. First up, AMD announced that their Executive Vice President and CTO, Mark Papermaster, will be presenting at the Deutsche Bank Technology Conference on August 28th. Mark your calendars, people. The presentation will be streamed live and will be accessible via the AMD Investor Relations website. For those who love tech updates straight from the source, this is something you won't want to miss. And hey, it's not every day you get a front row seat to a talk from a CTO, unless you've figured out how to spectrally project yourself, in which case, go you. But wait, that's not all. The big fish in this tech pond today is AMD's whopping $4.9 billion acquisition of ZT Systems. Yes, you heard it right. They're unloading almost $5 billion in cash and stocks to get their hands on this data center giant. With this move, AMD is bolstering its AI and data center capabilities, hoping to get an edge in a market that's practically a goldmine right now. Plus, there's a potential extra $400 million on the table for ZT Systems if they hit certain milestones post-acquisition. Fingers crossed, those benchmarks are reachable. With ZT Systems joining the AMD family, the focus is clearly on dominating the data center AI accelerator market, which is projected to touch a colossal $400 billion by 2027. The company expects this acquisition to positively impact their earnings on a non-GAAP basis by late 2025, which is financial jargon for, we plan to make a lot more money, and soon. Since AMD disclosed their Q2 2024 results, the stock has been on a bit of a joyride, gaining more than 37%. This outperformed the whole Zacks computer and technology sector's increase of 28.5%. Their data center segment in particular is on fire. Revenues skyrocketed 140.5% year over year, hitting $2.83 billion in Q2 2024 alone. AI is AMD's bread and butter right now, and like butter on hot toast, AMD is melting right into it. But let's talk competition. NVIDIA's shares have had a meteoric rise of 177% since July 30th, 2024. AMD is working in overdrive to close the gap. In addition to ZT Systems, AMD recently acquired several other companies, including Helsinki-based Silo AI. These acquisitions are all geared towards curbing NVIDIA's market dominance. Another highlight is how AMD technology is getting cozy in Microsoft's ecosystem, aiding in MI300X accelerators which power GPT-4 Turbo and other services. Take note, AI enthusiasts, the Instinct MI325X accelerator is here to challenge NVIDIA in both data centers and AI-enabled consumer PCs. But it's not all sprinkles and unicorns. AMD is dealing with weak embedded and gaming segments, and its stock currently has a high trading valuation. It's an interesting time for growth-oriented investors to watch this space. All right, folks, that's a wrap on AMD today. What do you think about all these moves? Game-changing acquisitions or just hot air? Do you think AMD can finally give NVIDIA a run for its money? Drop your thoughts in the comments below, and let's get the conversation rolling. All right, tech enthusiasts, let's zoom in on and decide if you should consider buying, selling, or holding based on today's juicy news. So first, let's recap the key points. 1. Oracle is making massive strides in AI and cloud computing with their state-of-the-art AI data centers and revolutionary cloud networking capabilities. 2. They've garnered big money bets in the options market, with a 60% bearish sentiment, which is interesting as it shows mixed feelings among the financial giants. 3. They've locked in nearly $98 billion in performance obligations and expect major growth in their Oracle Cloud Infrastructure segment. 4. Oracle's AI data centers are kicking butt, literally outpacing and outpricing competitors by an impressive margin. Now, should you buy, sell, or hold Oracle stock based on this? I'd recommend holding Oracle for now. Here's why. Mixed sentiments. The options market doesn't give us a clear signal, with more big players betting bearish than bullish. This suggests some caution, possibly due to potential volatility ahead or broader market uncertainties. Long-term growth. Oracle's deep investment in AI and cloud computing definitely brightens their long-term prospects. Their ability to train AI models at twice the speed and half the cost of competitors is incredibly promising. Follow the money. Locking in $98 billion in performance obligations indicates strong demand for Oracle's services and potential revenue flow, especially important in uncertain economic times. Innovation. Oracle's advancements like RDMA and their networking tech means they're not just keeping pace, they're setting new standards. Innovators tend not to lose for long. However, a hold recommendation suggests caution. The tech sector can be turbulent, and bears in the options market might see cracks we haven't noticed yet. Final note, if you're already invested in Oracle, hold and wait to see how these advancements play out. New investors might want to wait for a clearer market sentiment or a potential dip. Remember, folks, this is based on today's news, and always do your own research or consult a financial advisor for personalized advice. So there you have it. Where do you stand on Oracle? Holding on to your shares or waiting for a better entry point? Let me know in the comments. All right, tech fam. Today's been a whirlwind of market activity with Oracle flexing its AI and cloud muscles, CrowdStrike maneuvering through intense financial and legal scrutiny, and AMD making bold moves with jaw-dropping acquisitions to shake up the AI and data center market. Before you jet, don't forget to smash that like button, subscribe for more tech goodness, and share this video with your fellow tech enthusiasts. And hey, we're here every day with the hottest tech news, so make sure to come back tomorrow for your daily dose. Stay tech savvy, folks.